Thanks for watching the Weekly Forex Outlook at xm.com. This coming week, the Reserve Bank of Australia and the Bank of Canada will kickstart a key round of central bank meetings, which could impact the direction of major currency pairs. I'm Maria Mashardves, and joining me to discuss all this is Senior Investment Analyst Haralambos Bisuros. So Haralambos, let's begin over in the States, where the US dollar pulled back this week due to soft data. On Wednesday, we'll get the ISM non-manufacturing PMI. Do you think these figures will impact the Fed's plans? What's the probability currently for another rate hike by November?
Hello, Maria. Yes, the dollar pulled back this week as soft data forced investors to reconsider the likelihood of another hike by the Fed and also to add more basis points worth of rate cuts for next year. Specifically, they are now assigning a 50% probability for another hike by November. In other words, they are evenly split. While after Fed Chair Powell's remarks at Jackson Hole, they were seeing a 65% probability for another hike by November. Now, given how light the US agenda will be next week, with Monday being a holiday due to Labor Day, and also taking into account how quickly the market is readjusting its implied Fed rate path or when US data are coming out, yes, I believe that the ISM non-manufacturing PMI will impact expectations regarding the Fed's future course of action. Now, taking into account that both the preliminary manufacturing and services PMIs for August from the S&P Global declined, I believe that the risks surrounding the ISM index may be tilted slightly to the downside. That said, whether the probability of another Fed hike will further decline or maybe rebound may also depend on the new orders and prices sub-indices, which they give an idea of where inflation may be headed in the coming months. So, if there are declines there as well, the dollar and treasury yields could stay under pressure, and the equities may continue drifting higher as expectations of lower interest rates could keep the net present value of high growth firms elevated.
Moving over to Australia now, the RBA will meet on Tuesday. Can you tell us about the current state of the Australian economy and whether policymakers are likely to hike at this gathering? And what reaction might we see in the Aussie, also taking China's trade data into consideration?
Now, I don't believe that the RBA will hike at this gathering. Yes, they left the door open to further increases at their latest gathering, but data since then have not been that encouraging. The employment data for July revealed that the economy has lost jobs instead of gaining, while the CPI numbers for the same month for July showed that headline inflation dropped to 4.9% year over year from 5.4%, eliminating any speculation with regards to a potential September hike. Currently, investors are nearly certain that policymakers will keep their hands off the hike button at this gathering, while they are assigning around only a 35% probability for another quarter point hike by the end of the year. Having said that, though, with the core monthly CPI rate sliding only to 5.8% year over year from 6.1%, which is still well above the bank's inflation target range of 2 to 3%, closing the door to more hikes may be an unwise choice. So, if policymakers indeed reiterate the guidance that some further tightening may be required, even if they stand pat at this meeting, the probability for another hike before the end of the year could rise, and this could help the Aussie gain. However, as we all know, the Aussie is also linked to developments surrounding China, Australia's main trading partner, and its forthcoming direction could well be affected by the Chinese data we get next week. China has been in the spotlight lately with data pointing to deepening economic wounds, and responses by authorities have not convinced market participants that they could have the desired effect. Therefore, China's trade data on Thursday and also the CPI and PPI numbers on Friday could attract some special attention. Further weakness in Chinese exports and imports, as well as another month of deflation, could prompt traders to sell the Aussie, which could erase any RBA decision-related gains.
And finally, over in Canada, the BoC will meet on Wednesday. Back in July, the bank hiked by 25 basis points. Do you think policymakers will take any action this time? And what's the outlook for the loonie?
I don't expect action from the Bank of Canada either. And the reason is because underlying inflation, the core CPI in Canada is closer to 2% than underlying rates, than other core rates of other major economies, let's say. That rate is at 3.2%. And with the Bank of Canada maintaining a flexibility range around its target, that range is between 1 and 3%, officials may have the luxury to stay sidelined now and wait to see whether past hikes are still exerting downside pressure on prices. That said, similarly to the RBA, closing the door to future hikes before the objective is met may be a premature choice. Thus, even if Bank of Canada policymakers stand pat, they could keep alive the possibility of more action if deemed necessary. And this will confirm the view of those assigning a decent probability for another move in the coming months, and thus it may allow the loonie to gain some ground. However, whether the currency could have a sustained and decent post-meeting recovery may largely depend on Canada's employment report for August that is coming out next Friday. The July employment numbers pointed to some weakness, with the economy losing some jobs and the unemployment rate rising further. So, should next week's data reveal deeper wounds, those expecting another Bank of Canada rate increase may start having second thoughts. For the probability of further action to keep rising and take the loonie higher, improving labor market conditions may be a requirement.
Lumbos, thanks so much. This was the Weekly Forex Outlook here at XM.com.